I'm Danielle Hale, Chief Economist at Realtor.com. As summer days grow shorter, I'll discuss the latest inflation readings and how the cost of shelter and recent rent trends fit in. I'll review this week's mortgage rates and how market rates compare to the rates homeowners have on outstanding debt. I'll also review what we saw in this week's housing market and highlight trends in the Las Vegas luxury market. Finally, as kids go back to school, I'll review research on which school districts are most popular with home shoppers. First, we saw mixed signals on inflation. Consumer price data released earlier in the week showed a flat overall inflation trend, as falling energy prices offset a jump in core inflation, the metric that excludes more volatile food and energy costs. Shelter costs continue to be a big driver, in part because shelter is the largest budget item for many families. In fact, the growth rate has slowed, but CPI shelter prices rose 3.7% in the year ending in July. This is a stark contrast to market rents, which fell 2.5%, according to the July 2025 Realtor.com rental report. This marks a full 2 years of weakening market rents. The difference between CPI shelter and market rents shows the lag in the pass-through of changes in market rents to overall rents and shelter costs. On the plus side, it suggests there's likely some further inflation relief ahead from this lag. However, tariffs are expected to increase prices for other goods, and producer price data showed a much stronger pickup in prices. Not surprisingly, this has jostled market expectations about the Fed's September move. My take? We've still got another labor market and 3 inflation readings before the next Fed meeting. A cut is the most likely choice, but there's still enough data on the horizon to disrupt that path. Despite the swirl around inflation, mortgage rates proceeded lower for a 4th straight week, hitting their lowest level since October. Still, at 6.58%, today's market rates remain well above the existing rate that most homeowners with a mortgage pay. Realtor.com analysis of FHFA data found that 81% of homeowners with a mortgage had a sub 6% rate, and over half had a sub 4% rate, a large enough difference to lock in many. Yet the share is gradually easing, dropping 4% in the last year, a trend that I expect to continue. Put simply, the lock-in effect is still a factor for many, but its influence is waning. In the Realtor.com Weekly Housing Trends Report, our housing data showed no significant momentum shifts. Home prices continue to trend roughly in line with the prior year, as new listings and inventory both rise. It's encouraging to see the growth rate in newly listed homes pick up from last week, but recovery remains fairly range-bound, with improvements moderating relative to the year-to-date trend. That's nationwide. In some areas like Las Vegas, we're seeing quite a bit more momentum, with for-sale listings rising, especially among the highest-priced homes, a trend that's also softening prices in the luxury tier. Finally, as some kids head back to school while others try to make the most of their dwindling summer vacation days, we found the most popular school district based on recent home shopping trends in each of the 50 largest metro areas. Most commonly, these sought-after school districts command a hefty price premium, but there are some exceptions where you can find highly rated schools without a top-shelf price tag. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.